and so forth and so on. And joining us for this particular episode on COVID-19, banking sector and digital economy interventions, we have with us two guests who are with us via Skype. And I'll start with Robin Berstow, who's the chair of the Rwanda Bankers Association, as well as the CEO of I&M Bank Rwanda. Robin, great to have you on the show.
Good evening, Diana. It's good to be here.
We also have with us Clarisse Iribagiza, who is the CEO of DMM Hehe. Clarisse, great to have you on the show.
Thank you for having me, Diana.
My name is Denon Plissy, host of The Square, and with us, as always, are the resident panelists of The Square. Berna Namata, resident panelist on The Square. Great to have you tonight.
Thank you, Diana.
How are you?
Good.
We also have with us Charlie Hubbard. Great to have you tonight, Charlie. How are you doing?
Very fine, Diana. How are you?
Good. I want to start by asking you, how did you get your haircut? A lot of men are suffering right now. How is it you're looking so clean-shaven?
I think it's extremely important to come to The Square when I'm clean-shaven, so somehow I figured it out.
You figured it out?
Yes.
Some tips.
Yeah, you should share some tips next time.
Yeah, I'm happy to DM.
Yes. Okay. Like we do before the show kicks off, we just want to highlight a few issues that have caught the attention of The Square panelists this week. And Charles, I'll start with you. Is anything that you'd like to highlight?
You know, this whole lockdown is not a very funny thing, but it's come with quite a few trying times. But, last week I did mention about how we do not appreciate the spaces that we have and what we can do with them. This week, one particular thing that I want to talk about is the true test that parents are going through with homeschooling. Now, I'll give my own example at my home, and I didn't know that you would need Google to do work for a grade 4 student. You know, some of the stuff that they ask you probably, because of times, the way things have changed, you're no longer in touch with it, or certain shapes of a triangle. But one particular one is around Kinyarwanda.
Is that so?
Yes. And I am literally learning Kinyarwanda by teaching my daughter Kinyarwanda. So it's a very trying time. I've been on all these WhatsApp groups and parents share their experiences about having to go to primary school with their master's degrees. Yeah, so it's really a very interesting period. Yes,
yeah. It is. Berna, anything you'd like to highlight?
I wouldn't call it a trying time. Yeah. I think it's enjoying parenthood.
Exactly.
Yeah, and living to the world of parenthood. I think that's what it is. For me, I think I'm more concerned about invoices that are not being paid, yet the banks are open, and I'm glad that today's discussion will be, we have a banker to explain that. Because suddenly, even when people are supposed to be working from home, payments are not coming through, and I think that becomes part of the problem. Absolutely. So I don't know what it will take, but whoever is in charge of, ensuring that payments come through, I think they should be coming through. They shouldn't be part of the problem.
Absolutely.
Yeah.
Well, let's get back to the show at hand. Robin, thank you for joining us once again, and Clarisse, thank you for joining us. And the first question is to really understand, and it's to you, Robin, in your capacity here as the chair of the Rwanda Bankers Association, and also largely as the MD, CEO of I&M Bank Rwanda. And at the moment, a lot of businesses, a lot of individuals are very worried about how this pandemic is going to impact and affect their loan repayment schemes. And if you can just briefly start by telling us what interventions banks have put in place to ease the impact of these sort of loan repayments on borrowers, and then also what other interventions are being done to just also help the Rwandan economy in general.
Diana, thank you. We met as a group on the 18th of March. And discussed with the central bank, and the central bank has been very encouraging in terms of allowing banks or encouraging banks to reschedule loans for those clients that are impacted directly by the COVID-19 pandemic. Obviously across the board, and just to start mentioning businesses or industries that have been affected, I think would be quite a lengthy process. I think it's across the board. Just about everybody has been impacted. And actually, we started this process way back in February when we had the issues of the China supply chain being affected. So we already had banks doing stress testing at that stage. And then as the pandemic has grown, we've put more and more thoughts together in terms of putting together an option for customers. And that is primarily that banks will, almost all the banks have agreed that they will restructure loans, and that includes principal and interest for a minimum of 90 days. Most of the banks have agreed that rather than doing it on giving a moratorium across the board, they would apply sound judgment to applications that have made. And we encourage customers to approach your bank, make application, a one-page form on our landing page on our website. It's a simple two-click process. You do not need to visit the bank. Fill in the form, send it via scan, copy, take a photograph, send it through to the bank, and we will process the applications accordingly.
Thank you very much. And
if I look at, sorry, there's, I think just outside of the loans, there's also been an encouragement for us to move to using alternative channels. And if I look even in our bank alone, the uptake has been absolutely phenomenal. Banks have made arrangements to onboard new customers, to use alternative channels as well. In our bank alone, last week we saw a 650% growth in use of online payments, which is almost unprecedented. And it's mainly coming, the growth has been mainly out of the SME and retail banking sector.
Thank you, Robin. Charles Werner, is there something you'd like to add on what Robin said?
Well, I think Robin has the 90-day period is very interesting. That they say 90-day period across the board for both principal and interest. I did read something in the papers today about CSS Zigama deferring principal, but borrowers still have to pay interest. I'm very well aware that most borrowers have already had their March deductions, March obligations in terms of their loan obligations deducted. But I think there's a little bit more than borrowing, because that's, when we think about a bank, we think about borrowing, but there are other aspects to it, your whole banking operations. Robin did mention briefly about when China had issues and importers were having problems bringing in goods, and I think that's the whole value chain that needs to be looked at. If we look at it purely from a borrower's perspective, then we're really missing the bigger picture, and that's exactly where the problem is. Bana, you're talking about people paying you, but we even have issues of people actually getting their money from their accounts. If you have not been in ordinarily using online banking or your different e-banking platforms, there are some banks that do not allow you to start doing online banking unless you physically visit the branch. So you would fall short. You wouldn't want to fall short of blaming the banks. But the challenge is no one saw this coming. So you don't want to blame some of the banks that are ready. Sometimes, and I do not want to call names out here because I know Diana would want a paycheck or something signed against us praising one bank and calling out another. But it's befitting, and I think it's extremely important that central bank comes in on this. Let the process be as seamless as possible. If you want to do your online transactions, you should be able to do them. Let one bank not apply a moratorium or deferring of a loan obligation, and another bank does not do that. Because what's going to end up happening is that in the marketplace, different landlords will treat their tenants in different ways. Different suppliers will treat their customers in different ways, and so on and so forth. So, I think that there needs to be uniformity in the communication and the way they apply these regulations. Yes.
The regulations.
Yes.
Brenna, is there something?
Absolutely. I think I would like to, first of all, commend the central bank for taking the lead, because we saw the central bank give the leadership and the confidence that the market needs to be able to adjust. So part of what we're seeing, the adjustments within the commercial banks, is coming from the central bank. So, and part of the bigger responsibility actually still remains on the central bank. That said, I feel that the banks could do more in terms of, one, efficiencies. Our banks are still, there's a lot of bureaucracy around transactions, you know. So even when they're pushing you to go online, you can clearly see that the process is still, you know, you still have to go through a lot of paperwork, you know. And behind the paperwork, of course, it's people. So I think there's still room for efficiencies. Secondly, I think the banks could do more in terms of kind of building confidence, saying this is war, we are dealing with a war, which is the pandemic, but also we want to reassure you that business is still continuing. So I would expect that banks should continue lending, for instance. You know, they shouldn't try to cap and focus on the loan restructuring. You know, customers should still be able to get loans. Secondly, I feel that, again, the bureaucracy around how people access credit, give this, get this document, get this, I think that should be looked at. And I think as an association, there's room to revisit that. So that, for instance, if one needs an overdraft, if you need a salary advance, it shouldn't take longer than expected.
Absolutely, and I know there's you know, the stimulus package that was given by the central bank to the banks, which was announced for local banks, that was announced last month. But before, and we're talking about, you know, the whole online digital platform. And before we go to Clarice, I just want to hear, Robin, is there any response you want to share with regards to what Charles and Brenna have just said?
Unfortunately, only one bank has committed to interest and principal, and that's unfortunate. There's a reason. It has a lot to do with their customer base, who are salaried individuals. And when we say 90 days, it could be for longer, and it depends on the business that the customer is in. We've seen large corporates come through and immediately ask for 6 months. We've done the review, and I can say quite unequivocally we've been able to turn around those applications in the space of 24 hours, just to make sure that we give the people, or the customers, clients out there, the confidence that we are willing to stand by them, and that they should not be panicking. From an ongoing banking point of view, I hear you with regards to some of the bureaucracy. But remember, the bank's primary responsibility is protecting the depositors' money. And it's the depositors' money that we're lending out, not our own money. So unfortunately, we are in an era where we have a lot of fraud attempts at the banks. I know that banks have relaxed some of their onboarding requirements for opening of accounts. They have, where possible, agreed for not having a direct visit to the bank unless it's absolutely necessary. That's for account opening, for loan processing, both for new and for restructured loans. The banks are still in business. We have not, even with the restrictions on movement, all of the banks have been able to open and operate fully. Channels have been up. Branches are open, counters are open. There's sufficient liquidity within the market at the moment. the central banks for allowing for additional liquidity is in place, although it has not been necessary as yet. But as we see less and less money flow in the market, less loans get paid, it will impact on the liquidity in the market, and that will restrict then the bank's ability to get the cash out to the customers, and hence the stimulus package from the central bank. But we certainly, it's early days yet, and none of the banks have yet had to resort to any of the methods that have been made available to us. We are in fact in a fairly liquid position at the moment.
Thank you very much, Robin. That's reassuring hearing from you. Wouldn't you agree, Charles and Bernard? Please stay on the line. Clarice, we are talking a lot about, the whole digital platform, digital economy, and some have said that this pandemic, so to speak, has acted as a catalyst in driving up e-commerce in Rwanda. And if you can just tell us a bit more of the work DMM does, number one, and then give us an idea of how businesses in Rwanda are engaging more in e-commerce to service customers.
Yeah. Thank you so much, Diana, for having me. Just to share a bit more about the work that we do as DMM. For the last 10 years, our mission has really been to try and connect businesses to their consumers, to their audience. And we've done this primarily through 3 main products. The first being pretty much just getting your brick and mortar business online so they're able to offer their products and services on demand to their customers. So digitizing their inventory, digitizing some of their operations, digital payments. So this is the first product that we have. And give an example for a brick and mortar store, like let's say Vine Pharmacy or Simba. How do you get that online? How are you able to access goods and services from the pharmacy, over-the-counter products from Vine Pharmacy? This is an example of a store that we've been able to digitize. This is one product that we have. And the second is not just focusing on products, your everyday consumer goods, but also the kind of goods that you would find in your open-air markets. Think Nyabugogo, think Chimirongo Market. How do you access fresh produce? So we've also created a product around that, mark.rw, where you're able to really get products from the farm to the table conveniently. The third is what you've been seeing in this COVID season, basically home delivery services. We have a shipping platform that enables any business to be able to deliver goods straight to our customer's doorstep. So pretty much we have an end-to-end supply chain solution for digitizing the trade ecosystem. And in terms of how businesses have been responding, I do agree with you that obviously this season has catalyzed a lot of businesses to explore digital tools to see ways to get online. We've seen a lot of businesses looking for options, whether it's fully getting online through an e-commerce storefront or even just the ability to ship goods to the end consumer. On our own platforms, we've seen a spike in consumer access to these platforms. We've seen growth in basket size, over 200% growth. Obviously, there's panic buying that's been going on, so the basket size has grown significantly. But also a lot of businesses are reaching out to get online, and on a daily basis, we are digitizing businesses, helping them access any one of these platforms that meet their needs.
Before I just ask Charles and Bernard to also weigh in. Do you think this trend that's happening now, are we on the cusp of, I'm trying to look for a silver lining in all this, are we on the cusp of actually pushing forward and finally really trying to go in the direction Rwanda has been pushing for, of being a cashless economy, even after the COVID-19 pandemic? Do you think some of these trends are here to stay? What's your outlook on the future of a cashless economy based on digitized businesses at the moment?
I'm absolutely optimistic about the trends. A lot of businesses, as they reach out, one of the opportunities that we've had in this season is being able to educate them about the benefits of getting online. And not just educating, but them being able to see the convenience that they're able to deliver to their customers. So I believe that this is a trend that's here to stay, but it's also the future, and any business that is slow to catch on will definitely be disrupted.
Brenna, Charles, do you want to weigh in?
You know, as she was speaking, I was thinking of a story idea. In newsrooms, we usually have winners and losers, you know, whatever happens.
Yes.
Whether it's war, there's a winner and a loser. So I think e-commerce, anybody involved in e-commerce is winning in terms of the pandemic, because clearly the transactions are going up. But in terms of capacity, I don't know whether even the other businesses have the capacity. And to his earlier observation, the frustration you see, for instance, with banks, suddenly everybody is into internet banking or downloading the app, and then the capacity is not there, you know. Yeah, so I think there's room for, again, efficiencies in terms of how some of these e-commerce businesses operate.
Well, yeah. I think a huge opportunity has presented itself, and I know how banks really struggle so much. I'm in the real estate business, and I see how banks really want to outcompete one another in terms of how nice their branches look. With COVID-19, and what I anticipate moving forward is that they are going to try and outcompete each other in terms of efficiency in fewer branches and how their online services are being delivered. But that said, we are stepping into very rough times, especially because, and I think Robin alluded to this, that we do not know. Yes, there is a 90-day preliminary period that has been put out there, but we do not know for how long this is going to be out there. And we need to brace ourselves for extremely rough times. And I do not want to be the CEO of a bank. Robin put it very, very spot on. He said they handle depositors' money, and it is the money that they give to all of us. And you ask, for how long is this going to be there? Are we going to see another 2008, 2009 global recession? Already the IMF has predicted that we might have a recession that was worse
than 2008.
Than 2008. And however rosy bankers would want to paint this picture, because it's extremely important that they reassure us depositors of our monies, but at the same time, there needs to be a very deliberate effort around borrower education, around people who have their monies in the banks and who rely on the banks for XYZ. What happens tomorrow when we are going to have situations of massive layoffs? Today, we already have companies in Rwanda that are laying off people. These people who are being laid off had taken salary loans, salary advances, you know, buying a car here, or probably even mortgages for their homes and what have you. So the point is I think we need to really have a very candid conversation with ourselves on how ready we are for extremely harsh conditions that are knocking on the door. Yes.
I think the crisis has kind of laid bare an ongoing debate around the role of the public sector and the private sector. You know, there's always this debate of who takes the lead. Do you have the private sector or public sector? And what we're seeing with the pandemic is that the public sector is going to be very crucial in terms of how we move forward. And more so, the policy decisions that are taken during the crisis will influence how quickly we recover. So again, that is where you have, for instance, the leading government agencies, whether it's the Ministry of Finance, whether it's the central bank, they would definitely be taking the lead in terms of how, you know, how the economy recovers fast. So, but going back to what we're seeing with e-commerce, I think there's room also for innovation. I don't know whether Hehe has the capacity, for instance, to start even approaching businesses that haven't approached them, you know, to kind of say, look, we could actually do ABCD for you. So there's a lot of room, I think, to grow e-commerce still. But the biggest challenge also at the moment that I think we haven't covered a bit is the network. We have huge network issues. Why that is still a problem, I don't know, because the last time government invested a lot of money around the fiber optic, but for some reason, the network, even those who can afford to pay for the most expensive network still have issues. So I don't know what the problem is.
Robin and Clarice, would you like to respond to what the resident panelists have said? Clarice, I'll start with you since you answered last, especially with Brenna's comment on, does DMMHehe or, other organizations like yours have the capacity to really bring in innovations into the market regarding the digital economy?
Thank you for your comments, Barna. It's really been difficult for us. There are a couple of challenges that we are facing as businesses in e-commerce. Obviously, connectivity is a huge challenge. Even I personally have faced a couple of issues just trying to access some of the digital platforms out there during this lockdown season. I'm not able to access every service efficiently. But a lot of us were not prepared for what we're going through right now. And whether it's in terms of the infrastructure hurdles, the kinds of innovations that are needed to meet the needs of a specific context, not everybody is online. How are we able to tap into the consumers that are offline or the businesses that don't necessarily have the digital skills to use the current tools that we have? All these are challenges that we are thinking through and trying to address with our current solutions. But you're absolutely right. We still have a long way to go, and we are working tirelessly to figure out how we can, move everyone from non-consumption to consumption, whether it's through the infrastructure that is needed or having convenient tools for them to use as businesses and consumers.
Important point there earlier on, and that is keeping the confidence of our depositors is really important. One must also be reassured by the fact that most of the banks don't only source funding from within Rwanda. There are development financial institutions who provide assistance, especially in the form of liquidity and senior debt to banks within the sector. So we have support. Our banking sector is robust. If we turn our sides, and I can give you the example, I know that there's a lot of negativity about connectivity and so on within the country. However, if you take our bank, our head office is running with 24% of the staff that are usually in the head office are in the head office. We have 3 separate sites, all operating full banking operations. And that accounts for another plus minus 35 staff, and the best approximately 30 staff are operating. All of them are operating via online channels. We use various meeting applications like Skype and Zoom. So we are in fact able to run an entire organization with close to 380 staff, all via online channels. That's internet, and it's not just emails. We have people working on live systems via virtual private networks from their own homes. We have call centers operators that are actually sitting in their homes, operating call center programs directly from their homes. And I think by and large we've been able to cope. The third point that I wanted to just on to is the electronic banking side. First of all, not only just the banks, but we also have the mobile network providers. And I'm going to take this as an opportunity I'm usually a very optimistic, glass half full kind of person. But I do want to make a shout out to those small businesses that are insisting that customers cash out instead of accepting payments via mobile money or via alternative banking channels. That we have, as an industry, agreed between the banks and the mobile networks that we will not charge for any transactions, not uploading, downloading, not transferring to and from, not payments. The only area where you have to pay is for cashing out. And by forcing consumers to cash out to make payments is increasing costs for them. And I think it's high time that businesses pick up the mantle and start accepting alternative channels for payments.
Thank you very much. We are now going to go to our Twitter feed. and look at the comments that our viewers have shared, and there are quite a few. Charles Brenner, before we go to a Twitter feed, is there anything you'd like to say?
No, I think we should.
You're looking forward to the Twitter feed. Okay, we have the first tweet from Frank Chidenza, and Frank's tweet states that the central bank can suspend loan repayments and drop the interest rate. What monetary policy, if any, has the central bank adopted to circumvent the fiscal disruptions caused by COVID-19? Truth is, private banks are in the business for profit and are not self-regulated. Robin, would you like to comment briefly on that tweet?
I think the mechanisms that the central bank have put in place for now, including the extended lending facility that has been put in place, which, as I mentioned earlier, is not necessary at the moment, because the central bank would prefer that we exhaust all other avenues before we access the 50 billion that they've made available to the banking sector. We have as well, I think it's also important to mention, across the board, the commercial banks have agreed that on these, on any restructures of the loans, there will be no charges levied by any of the banks. And I appeal to anybody that has been charged to get in touch either with the Bankers Association or the Central Bank direct and to make a complaint. We agreed. The Central Bank have asked us not to charge. The banks have agreed not to charge. If there are charges levied, you need to raise your hand and advise the relevant authorities.
And I hope our viewers are listening. Please, if you know this is happening or this is happening to you, please, go to the relevant authorities. We have a Rwanda Bankers Association, as Robin has just pointed out. The next tweet is from Alex, and Alex in his tweet states that it is clear that the aftermath of this pandemic is a big economic crisis and maybe rise of unemployment. How are these commercial banks going to balance looking for profits and implementing emergency measures to assist impacted customers and small businesses? I think it's an interesting question because, at the end of the day, profits for your shareholders vis-a-vis trying to help those, SMEs, MSMEs that are affected by this pandemic. Robin, would you like to respond to that as well?
Most certainly, Diana. Yes. Yes, we have to balance the return to shareholders vis-a-vis helping customers. But we also have to remember that banks operate within this market, and we are here for the long run. And I think people have long memories when it comes to whether the bank stood by them at in their time of need. There is no, banks always get accused of handing out umbrellas when the sun is shining. We understand that we are in uncharted territories. There is talk already that this might not be a recession, but we might even get into a depressionary mode, which means we will struggle to get out of this. It might be longer term. That said, it's only early days of now. We've finally seen some action taken by some of the big countries that have been affected. If we can get on top of this and can slow the growth of the virus, we'll be back in business as soon as possible. So it now becomes, is it a social issue or a finance issue? And I think, first of all, from a social issue, follow the regulations, stay put, don't interact, use the right the right advice that is, or the used advice that's been given with regards to your health and cleanliness, and at the same time, to ensure that the banking sector is there to support our customers and clients in the long run.
The next tweet we have is not really related to what we're talking about today, but I'll read it anyways because I know a lot of people who are not homeowners are going through this issue. And it's from Alex, who says that, Rwanda Square, with the country in a state of lockdown, tenants and landlords have failed to arrive at a consensus on reviewing existing rental terms. Are there any direct interventions by the banking sector with landlords in place to mitigate this during these COVID-19 times? Are there any, Robin?
Not really. We haven't specifically looked at property owners. I think Charles would be very well placed to add to this when I'm done. But I also think that the same goes for all small businesses, and that would include in that landlords. Maybe focus on collect the money that's due to you. Reduce your cost possible. Make sure you look after your staff, because when we bounce back, you're going to need the staff. You can't go through a hiring process. So if you're running shifts, split it 50-50 and allow some staff to work for a portion of the time. Reduce the days. I would rather take a pay cut than a job cut if it became really necessary. Make sure that you communicate with your customers, and then stay in contact with your suppliers, because once things turn up, you will be in a position that you will need them, and as well they are in a position to provide you with additional finance outside of what the banks can provide you with.
Charles, do you want to weigh in on that?
Yes, I'm happy to weigh in.
As someone in the real estate,
yes, I think the whole issue of the tenants and landlords is a little bit complex, because it goes beyond just the tenants and the landlords. If you're to look at it from a landlord's perspective, irrespective of whether the shops are closed or open, there are costs related to the building. It has to be lit, it has to be watered, it has to be secured, it has to be cleaned, it has to be managed, and so on and so forth. Now, for the tenants, again, depending on the kind of business, for some of the businesses, they are totally closed. For some other businesses, it has slowed down. And for some, luckily, it is business as usual. Pharmacies are open, and so on and so forth. So it is a little bit difficult to treat it across board in a similar way. But for property, just like banking, one of the things that we are realizing is that you've had historically problematic tenants who are using the current crisis as a scapegoat. And I'm sure Robin will agree with me that the same is happening in the banking sector, that perennial defaulters are saying that, don't you see, COVID is here, I can no longer meet my obligations. And that's where really the bit of the challenge is. However, I think it's the current crisis, we cannot ignore it. Ourselves, we are treating tenants in different ways. There are those whose rent has been deferred. Some of them, their rent is being reduced by a certain percentage, and others, they are not affected. It's business as usual because they are working. So it's really dependent on tenant by tenant. But just to reassure Alex, I'm sure all tenant landlords relations are governed by an agreement, and I'm sure there must be provisions in that agreement on how they manage their relations. Yes. Yeah.
Our next tweet is from someone who I think is in the diaspora, and it's addressed to the CEO of I&M Bank Rwanda. And Joe states that, dear CEO I&M Bank Rwanda, I'm a Rwandan diaspora exporting and distributing made in Rwanda to USA. Asking 60% loan equivalent of my collateral for inventory purchase, banks want another guarantee. What is the purpose of the collateral? Over to you, Robin.
I'm trying to link this with COVID-19 and probably the...
Robin, would you like to weigh in on that tweet?
Yeah, sure. Difficult one, because I'm not sure which bank is involved. And it depends on the type of exporting that they're doing, the form of export instrument that has been used, whether it's on open account, whether it's on by letter of credit, the type of collateral that's been offered. I think we always tend to forget that there are agencies in Rwanda that are there to support exporters. The Development Bank has a special program that is available to exporters, where costs are significantly reduced, and then we have the We have agencies that are in a position to provide collateral support in the absence of a facility that is not fully tangibly secured.
And our tweet before we go to the question, last question for tonight, or last topic area for tonight, is from Jean-Yves. And Jean-Yves is asking, his question is to both our guests, Robin and Clarice, and he states that kudos to INM Rwanda Bank for different quick initiatives as responses, including digitizing most of the services. What is done in terms of distribution? And then to Clarice, DMHehe, what is your experience in terms of e-payment solutions or partnerships? And he also includes SPEN into the conversation, as well as Momo cards and so forth and so on. Would you like to start, Clarice?
Yeah, sure. Our experience with digital payments and just like he mentioned with SPEN, Momo cards, these are all solutions that we are using, whether it's for consumers to be able to pay online on the various platforms that we have, or how we're paying suppliers, whether it's with Momo or SPEN. The journey has not been an easy one since we've had to integrate with each and every one of these solutions. And what I would say is we've come a long way as an economy, as a country, in being able to have digital solutions. I remember about maybe 5 years ago, we had a product that literally we had to kill off simply because we could not find the right type of digital payment solution for it. But today, e-commerce is growing. The ecosystem is thriving, not just because of COVID, but because of the convenience and the resilience that it brings to the economy. And digital payments are playing quite a central role in that. So we're able to offer different kinds of digital payment solutions on our platforms. Suppliers are able to accept different kinds of payments, which is music to our ears. But of course, there's still a couple of people that are still resistant or hesitant to jump on board. But all in all, I would say we've made significant progress when I look at the last 10 years that Hehe has been in business. So currently, we are using card payments on our online platforms. We have Momo. Actually, Momo is the fastest growing payment mode on all our platforms. And SPEN is actually quite convenient for a lot of the suppliers that we're working with within our supply chains.
Thank you very much. Robin, the first tweet was addressed to you.
I wasn't quite sure about the mention of distribution, what the gentleman meant on distribution. Was it physical distribution, or was it alternative distribution? And I can address both. Branches are there, ATMs and off-site ATMs are available. We have mobile ATMs as well. For cashing in or uploading and downloading, you can do via your bank account directly to and from your mobile money wallet, or for in the instance of SPEN, you can also load directly from your bank account. In terms of the addressing the wider distribution network, and that's across the banking sector, agents are still up and operating. So there is facilities, and I think we're getting to almost the stage that Coca-Cola had when they first came to Africa, and that they wanted to make you not have to walk more than 1 kilometer to get a cold Coke. I think in some instances you don't even have to walk 1 kilometer to find a banking outlet, especially through the agent channel network. And then now with onboarding, and I'm very glad that Clarice spoke about SPEN, because your onboarding there is completely and totally paperless. It's a photograph of yourself, your national ID, NIDA confirmation, your KYC is done. You can be operating within 10 minutes, and you don't need to go near a bank.
Our last tweet before we finish is from Julian, and Julian states that indeed we need to use tech as part of disaster response, but we also get to understand the regulatory maturity of the industry in Rwanda to ensure that they're not risky allies. So the last question, and it's addressed to you, Bernard, Charles, and our guests, and I'll start with our guests. These are unprecedented times that we're living in. There are shocks felt by the pandemic across countries and economies worldwide. And my question to you is, what insights from where you stand in your industry, as leaders in your industry, what insights do you have on what private sector enterprises can start doing differently? Because we will definitely, undoubtedly, be affected by this pandemic. So post-COVID-19, what can businesses start doing differently to adjust for the long term? And Clarice, I'll start with you.
Thank you, Diana. I would say that COVID-19 has given us a glimpse into the future in terms of what a digital economy could look like. And my recommendation for businesses would be, first of all, seek to understand what your consumer needs are, and basically, how can I serve my consumers better? What can you anticipate what consumer needs are, so that we are not caught off guard by pandemics or whatever it is. But a lot of businesses that have been able to navigate this COVID-19 pandemic from our perspective as a technology enabler were businesses that were prepared, businesses that understood that convenience was critical for their customers. Secondly, what I would say is we are in a globalized economy. A problem in China is a problem here as well. So we cannot operate like we're in some form of isolation, and understanding that disconnectedness affects our supply chains overall is something that businesses should be really vigilant about. What visibility do you have over your supply chains? Do you understand the impact of something overseas, how that their consumers are connected, and we're nearing what you'd call a perfect market, where consumers know what products are out there, what prices those products are at. And as a business, this is really critical, because what could have been a competitive advantage maybe 10 years ago because of the lack of transparency is not the same today. So embrace technology as a tool for you to be able to navigate all these different challenges.
Robin?
This is not going to last forever. We are going to come out of this, whether it's in the next 30 days or 90 days or 6 months, we don't know. Advice to the small businesses out there: revisit your business plan. Make sure that you are ready to start business when you're able to. And I'll reiterate: collect your money. I know that Vera raised it in the beginning of the program. Collect your money where possible. Use all means at your disposal. Reduce your costs. Renegotiate. Include with your landlords if it's your rent. Look after your staff. Keep in contact with your suppliers. And then most important, keep in contact with your customers. Keep speaking to them, because they're going to be the same customers when we back to business as usual. And lastly, if I could just add, speak to your bankers. We are here for you. We want to reiterate that we're here to support you. We are not closed for business. We are most certainly open for business, and we're here to support all of our clients.
Thank you very much, Bernard. What insights do you have in the future of how businesses should operate post-COVID-19?
I think Clarice has just put it out there. For a very long time, we were being urged to go digital, to pay attention to technology, and for most of us, we thought it's an option. Now we realize it's inevitable. Businesses have to invest in technology and adjust. Unfortunately, when you do this during a crisis, it comes at an extra cost. But given that technology is staying with us forever, I think it's worth the investment. So perhaps businesses have to pay attention to technology in the long term and kind of make the investments that have to be made. Yeah.
Else?
I think a number of things. One, I just want to at the risk of repeating what Robin has said, is that it's a wake-up call for all of us. Now, if you to start with business people, and irrespective of whether you work for a company or you own a company, it's high time we all revisited our costs. Is there value for money in the way you're spending, whether on your team or on what you have, in the space that you're occupying, in what you're buying, in the way you're pricing your goods and services? It's high time we really, and this lockdown should really be a period for business owners and captains of industry to really revisit the way they are running their operations. On the banking side, I think it's also a very good opportunity for the bankers themselves to educate themselves in understanding businesses better. Typically today you'll walk to any bank, and I will not blame them because sometimes there's a huge shortage of resources, especially know-how. And the same loan officer who is appraising an energy project is the same loan officer who is appraising a poultry project, the same guy who is appraising a hospitality project, and so on and so forth. There's just no way you can understand all those sectors in equal measure. So I think they also have to invest in themselves, invest in their team, so that they understand businesses better. It's even before COVID-19, we're already facing a financial situation where businesses were struggling to make ends meet, especially in an economy like ours, when government delays to pay its suppliers of goods and services on time, the entire economy will feel it. So that whole initiative that banks need to take to be able to understand businesses better, the most opportune moment is now. In a sector I understand very well, in my day-to-day business, which is real estate, initiatives that are already being done in other markets where retailers do not pay rent to landlords, but rather pay a percentage of their turnover. Initiatives like that are yes. Initiatives like that are what are going to really be able to sustain our market. Yes, yeah.
Fantastic. We've come to the end of the show. Unfortunately, time goes by so quickly. I would like to thank Clarice and Robin. If we can just go to you. Thank you for tuning in. It's been a pleasure having you. Very insightful comments and information from you. Thank you very much, Robin and Clarice.
Thank you for having us.
Thank you very much for the opportunity.
Thank you very much. And Charles Berner, always a pleasure having you guys. To our viewers, thank you very much. This is, like we said last week, it's a series of conversations that we're having around the COVID-19 pandemic. Next week, we'll be discussing mental health. A lot of people are going to be staying home. It's also going to be a difficult period. We are entering the 26th year of the commemoration of the genocide against the Tutsis. So it's going to be really tough on a lot of people in Rwanda. So please send your comments, send your suggestions ahead of next week's topic on COVID-19 as with regards to mental health and wellness. Thank you for tuning in to our partners, Uzi Collections and Bourbon Coffee. Thank you very much. Have a good night and see you again next week.
Hi there, I'm Marie Linganwa, a medical doctor at Katiru Hospital. As you probably heard, we have a situation going on with the COVID-19. I'm here to ask you to stay at home. In case you have symptoms of the COVID infection, let's say you have fever, you're coughing, call the toll-free number 114 and we'll try to dispatch a team to come pick you up. In case you really can't wait and you have to come to the hospital, put on a mask and come to the hospital, but try to distance yourself from others so that you don't transmit the infection to them. And remember, stay home, stay safe, wash your hands, and we're here to help you whenever you need us.
RBA app is here. How'd you get it? It is easier than ever. Go on your home screen. Press Play Store or App Store. Type RBA. Search. There you go. You have RBA app. You have all RBA radios, news, business news, sport and entertainment.
COVID-19 is an infectious disease caused by the newly discovered coronavirus firstly introduced to humankind. Although it's extremely contagious, we can fight it. By avoiding the touch of eyes, nose, and mouth with unclean hands, regularly washing hands with soap and clean water, or rubbing them with alcohol-based sanitizers. Covering the mouth and nose with the bend of the elbow when coughing or sneezing, or using a disposable tissue. Avoiding hugs and handshakes. Practicing social distancing and avoiding unnecessary movements. If you seek medical help, call the free toll number 114. Stay home, stay safe, and let's help prevent the spread of COVID-19. This message has been brought to you by the Rwandan Ministry of Health, RBC, in partnership with SFH Rwanda.
Happy New Month. You are live on RTV on this first day of April. Here are stories making our headlines today. The first lot of COVID-19 patients set to be released at the end of this week. Beneficiaries of public hospitals and health centers applaud efforts invested in seeing all patients despite coronavirus pandemic. And on the international scene, hate crimes against Asians on the rise in the US due to the coronavirus. Good evening and a very warm welcome to RTV News Tonight. My name is Gloria Mutesi. Today at Urugwiro Village, President Kagame chaired an extraordinary virtual cabinet meeting through video conference in accordance with COVID-19 prevention measures. This comes as confirmed cases here in Rwanda have continued to increase and containment efforts have continued. This is an update on COVID-19 from the Ministry of Health. 7 new corona cases were identified today, bringing the total to 82. 1 traveler who had arrived from Dubai, 1 traveler who had arrived from the UK, 2 travelers with frequent travel in the region, and 3 contacts of previously confirmed positive cases. All new cases have been isolated, and the tracing of all contacts has been conducted for further management. Heightened vigilance continues to be required, and enhanced prevention measures announced by the